Bismillah, alhamdulillah, rabbil alameen, wa salatu wa salamu ala rasulillah wa ala alihi wa sahbihi wa man wala. Welcome everyone to our panel on Muslims and impact investing, hosted by the Center for Global Muslim Life. We're really grateful to all of you for tuning in and listening here. We've got a great group of individuals here who put together a number of important initiatives and organizations over the years, both in the commercial as well as the social finance sector. So I thought we'd just jump in right away by introducing ourselves to you. We'll go ahead and begin with Junaid, if you could kindly introduce yourself.
Sure. Assalamu alaikum. Pleasure to meet you all, and it's a honor to be on this panel. Thank you for the Center for arranging this. Quickly introduce myself. Junaid. I started off my career on Wall Street. Been an entrepreneur for the past 20 years. And in this context, I've been blessed with the opportunity to be part of Yaqeen Institute for Islamic Research. Since inception, currently I'm on the board, and also I am the Chief Operating Officer. But in the context of this discussion, inshallah, I've been part of the Endowment, which was an initiative that we started off from the onset of the organization to help sustain the operations, and I serve as the CIO. Alhamdulillah. So inshallah, on that note, I'll pass it off to Essma.
Jazakallah khair, Brother Junaid. Assalamu alaikum. Thank you all for joining us today. My name is Essma. I work in sustainable and impact investing at an investment and wealth management firm called Glenme Trust based out of Philadelphia. Overall, we have about 45 billion in assets under management. And then within our sustainable and impact platform, specifically what I focus on, we have about 6 billion. And I'm really interested in the Islamic finance space. Don't work in it full time. I work in traditional sustainable and impact investment work, but constantly research and try to stay involved with Islamic finance to try to bridge the gaps between the two spaces. And so really excited to delve into that conversation with you all today. And I'll pass it on to Brother Saad.
Assalamu alaikum, everybody. We were just playing the let me guess where you're from game. So I'll tell you that I'm originally from Pakistan. I live in the Bay Area. My name is Saad Khan. And I suspect the reason I was called to this panel is because Umar and I have spent some time together in other contexts, and specifically about now 9 years ago, myself and two friends started what at the time was a new platform, a new fund called Uprising. It's not that new anymore, but was really focused on this idea of doing good and doing well and proving the case that, in fact, those two things go hand in hand as opposed to are handicapping one another. And so when we first started, this idea of impact investing was actually a very abstract academic thing. And our thought was, let's just go prove it, because we know enough people around here who, who are living both of those lives together. And so I guess in a lot of ways, I've been thinking about my whole investment career for the last 10 years as being the existence proof that doing good and doing well, in fact, do belong together and can turbocharge one another. And it's been really fun just to watch just the world of impact investing and even the world of Dustin. I just read Dustin's top list of Muslim startups, and it was pretty humbling to me just to see how far that world has come. Even the impact investing world, which is now feels like so popular and has all these giant pools of capital, coming to work in them. And likewise, even on looking at that startup list, I just was really, really pleased at how much spiritual life is being embraced in the context of even tech startups and businesses. So very, very happy to be here and contribute in whatever way I can.
Thank you. I think I'm supposed to introduce myself as well, apparently. So my name is Umar Moghul, and I've been practicing law for the most part for the last 20 years or so. Been involved with Islamic finance in various asset classes around the world, and increasingly over the last 5-6 years, getting involved in the social finance sector and also bridging the commercial finance and social finance worlds together, helping organizations realize their mission through their organizational platforms, their investments, their transactions, and other legal arrangements, and increasingly looking at Zakat and Awqaf as well, here in the U.S. in particular, and again, bridging business and philanthropy and trying to embed spirituality throughout the transactions that we structure and the documents that we design. So why don't we get started right away with our format here, which is really to rather than to lecture at our audience, to engage one another and share insights, experiences, ask one another about our respective experiences, and of course sharing challenges and lessons that we've learned over the years. I don't know if anybody in particular wants is itching to get started here and ask someone something. I'll certainly defer to them. Otherwise, I'll have to pick one of you at random and put you on the spot.
It's on the spot, and then we'll help you out. How's that?
Fair enough. Fair enough. Okay, so why don't we stay with Junaid? It's easier for me to go right to left here. The endowment that you mentioned was set up, I think, a few years ago, and it's home to a lot of wealth of the Muslim community globally, I presume, not just here in the States. How do you approach the responsibility of the endowment? What is the mindset or the frame of heart, the frame of being that you bring to the endowment along with others?
Sure, Jazakumullah khair, for the question. So the endowment, obviously the main purpose of the Yaqeen endowment is to help support the operations of the institute itself. Now, the process of how we started off was we, gathered a group of individuals who were experienced in the investment world in different realms, whether it be venture capital, whether it be real estate, traditional equity markets. And we put together an IPS, an investment policy statement, which helps guide our investments. So we looked at traditional endowments of major universities throughout the U.S., how they are structured, and obviously the biggest or the first screen in all of our selections of different opportunities is the Islamic one. And being in line with our faith first and foremost in that. So that in itself poses some challenges. Alhamdulillah, the Islamic finance world has gained leaps and bounds over the past few decades, but still has a ways to go. So we have the traditional, equities that we invest in, but we've also allotted a considerable portion of the endowment, which is not traditionally done in other endowments, to alternative investments, and whether it be in real estate and venture capital. And another portion of the endowment is meant to be in line with our organizational objective as an institute to dismantle doubts, nurture a conviction, and inspire contribution, and find these opportunities that exist that are out there. This comes with its fair share of challenges, which we can discuss. But alhamdulillah, that's kind of a quick overview of how we started. And alhamdulillah, to this date, we've within the 5 years we've been in existence, the endowment now is about $20 million, alhamdulillah, which is managing that probably the cause of my lack of hair or the gray hair that you do see, because it is an amana. It is a trust that we take very seriously, because as you said, it is the funds of the community and not one of any of us individually.
Hey, Junaid, I have a question for you there. I'm curious how, obviously you talked about it being an amanat and the responsibility you feel. I'm curious how that contrasts or how it feels relative to, you've been an entrepreneur in other contexts before. I'm just how you held that responsibility versus this responsibility.
Great question. So personally, my investment style or profile would be very different than how I would be much more personally. I guess my nature is to take bigger risks and to look at different opportunities and maybe not be as diverse. Now the book of investments and how we're taught in business school and we're taught is that there needs to be a diversified portfolio with different sectors, different weights, different and regions, and I would say we are much more risk averse in managing the endowment versus how I would be personally.
Saad, do you want to share with us, kind of building on what Junaid mentioned, the spiritual and the ethical, and how that kind of is infused in the endowment property management. How does spirituality play a role for you personally with Uprising and with other initiatives that you are and have been involved with?
Yeah, no, it's a good question, and it's a evolving question. I feel like there have been so many chapters, even to my own um, path to this, and and I'll say off the top, like Uprising did not start off and is not by any means Islamic finance, explicitly or implicitly. It doesn't fall into that category. We didn't start with that set of rules. I think for me, where spirituality enters into it is just, it's so much, it's like, it's been such a core part of being Muslim, has been such a core part of who I am as a human being my whole life, and it's like I suppose it's the prism through which, everything gets filtered. But, I think when we first started Uprising, at least, at the time there was, I think what I was striving for was this notion, I could just see how I was living this double life, the double life being, my day job was I was a venture capitalist in traditional venture capital, doing what traditional venture capitalists do. That's why I was curious, Junaid, about, like what it was like for you, pre taking on this endeavor. And I guess what I would always notice is just like the rules of how people behave in business are pretty different than the rules of how they would want to behave in their homes. Like I just noticed like there was like a pretty big dichotomy of how you showed up at work and what you were praised for, and then how you would treat your family or your kids or the people around you. And the way I used to compensate for that was I would just do a lot of things for the community, for nonprofits, for things that I just thought were inspiring on the side. And I think Uprising, for me and also for my partners who started, and they have their own paths to it, and they're from different traditions. I feel like we have all the Abrahamic traditions covered in our crew, but my path to it certainly was one of just wanting integration. It was like it's been too long where I had been living this what felt like a sharded life, and this idea that, hey, like, why don't we treat people and behave the way we aspire to in our best selves all the time, and not have this like this sort of shadow world that we operate in. And so and I think with that intuition also came another intuition, which was that actually I had a belief that doing good and doing well were not these like disparate things, that in fact that's that's what everyone is actually striving for. And the fact that we keep them apart is actually the artificial way. And so I think when we first started Uprising, it was really much just proving that case. And I think proving it to us meant, hey, even like if I take the rules of traditional performance in the world of finance, like I don't actually believe that if we do things the right way, that we'll somehow be handicapped from a performance perspective. I just didn't believe that thesis intuitively in my bones. It didn't feel right. And so I think Uprising for us was like our way of expressing that notion. And I think for me, for a long time, it was like proving that, that like actually those two things go hand in hand. And I would say like the spirituality part of it has been interesting, because I think when we first started, I had that, and I still noticed like because we've been around now for a number of years, like it was really important for me to prove that this is possible, because I thought if I can prove this is possible, then there's no reason why anyone would do anything else. There's like literally like if that's the case, then why would you ever pick a traditional career in finance or entrepreneurship that was not infused by this, this mission orientation? I think what's happened since then, which has been really profound for me, is I realized that there was a little bit of a chip on my shoulder when I would approach it that way. It was like that somehow, that to be sustainable, I needed to prove something, even in ways that weren't necessarily consistent with my values, just to prove that I still belonged in that arena. And I think what's happened since, I think I'd say the next chapter of our development has really been the more we've focused actually on our own spiritual path. I've just noticed, and even this idea of like change outside, because a lot of it for us was about, hey, how do we want to enable the world that we all would dream to be in, as opposed to the one that we are in? But I noticed that actually the more I worked on myself and my own path, the more that those shifts would start to happen, the more I felt like the universe would come meet us in new and interesting ways that I did not expect. And in a lot of ways, I just found it became a lot more easeful. And I would say that for me, that started off as an individual spiritual path, and almost rediscovering my own faith, not as a good son, but as somebody who, was truly inquiring, and, looking for a path to surrender. And I think what's been really fun about our crew and Uprising in general is that it's actually become a group journey for all of us, where we're all doing that together. And everyone's using different tools to do it. And I think the more emphasis and more explicitly we've actually put attention and focus on it, the more I realize that actually all of our work is really just that. And all the outside stuff is stuff that happens as a consequence of when you make progress here. And it's been really fun to see how those two have met. And so actually, even as we start looking at other companies and people that we invest in, I think a big part of what we look at it is, is this a spiritual journey for the person who's on it, and what's their openness to that? And that just makes for this higher quality interactions and such a more fulfilling life. So I'm really appreciating all that.
Either of you have follow-up questions or challenges for our brother Saad?
Well, I think I have thoughts, to share and build on both what Brother Junaid and Brother Saad had shared. SubhanAllah, Brother Saad, as you were talking about kind of the doing well by doing good cycle, I think one thing that comes to mind often is Ayat al-Nur in Surah al-Nur, where Allah subhanahu wa ta'ala says essentially like Nurun ala Nur, like when believers do good, that good starts to create more good, and it's like a cycle of good. And that's often how I think about the investment process in particularly sustainable and impact investing, right? It's this notion that like good creates more good, that creates more good. And it's just this constantly virtuous cycle of good. And then that can be applied in a myriad of ways. I mean, thinking about, for example, if one invests in an enterprise, a renewable energy enterprise, for example, that, they've done their due diligence and they see it to be a potentially profitable investment, but at the same time, it's creating, positive environmental outputs. And then when you actually track the externalities throughout the process, if that company or that investment, was thoughtful and intentional about having ethical practices throughout, then you actually see outputs of good across every step of that business. So for example, when they're going across their supply chain, they might be really intentional about engaging with the surrounding communities and ensuring that they're actually benefiting and not harming the surrounding communities and any stakeholders across their supply chain. And so you see these outputs of good. And on the flip side, for companies or, investors who might not have these explicit considerations, you often see negative externalities at every step of the investment process from an environmental and social standpoint. So it's really interesting. You kind of mentioned that, and that constantly comes to mind for me as we think about, anything in life, but really in this case, investing. And then I think the other thing, Brother Junaid, that you were sharing is the component of amana is such a huge and important component. As I study the overlaps and the differences within the Islamic financial industry as it exists today, and the kind of ESG or impact space, and I'll take a step back and offer a few definitions. First and foremost, generally, when people say Islamic finance today, generally speaking, what they mean is interest-free products. That has typically been the mainstream definition of Islamic finance. When we look at the majority of mainstream Islamic financial standards and frameworks, seldom do they explicitly make mention of ESG and human rights. I think we're seeing the narrative slowly but surely change now. And, Brother Umar, you're the expert in this space, so would invite you to opine. I think generally what we've seen in most applications is that those ESG considerations have not been as explicit yet. When we say ESG, we mean environmental, social, and governance criteria. And so many investors are accounting for ESG criteria in their investment processes for risk mitigation, simply because it's the smart thing. It's a smart business decision. So if you're a real estate investor and you're thinking about investing in a real estate development, and it's along the coastline, in Miami, for example, if you're not thinking about climate change, your real estate development might actually be underwater in the next 2 to 3 decades. So you're going to lose a lot of money. So even if you don't care about making the world a better place, simply if you want to make sure that you're actually just enhancing your return streams, you need to think about ESG criteria. And then impact takes it a step further and says, I want to identify some sort of problem in society and fix it using my capital, using my investments. So it's not necessarily sadaqah. It's not you're giving a donation and then you're leaving it be. You're thinking about self-sufficient financial mechanisms. So I want to invest in an enterprise that's going to tackle the effects of climate change, or that's going to tackle poverty, or spur job creation for Syrian refugees in Istanbul, Turkey, for example. So that enterprise is then going to financially sustain itself and create wealth within, for example, that socioeconomically marginalized community, while also, benefiting them and benefiting you as an investor. And even as I went through the definitions of ESG and impact, you might think, well, obviously these things have a place in Islam, because just from a values perspective, Islam teaches us to think about worker rights and environmental stewardship and all these different aspects. But it's something I think that we haven't yet seen formalized into Islamic financial processes yet. And that's something, we could go into further detail throughout the course of this discussion. But I think one thing I've really admired about Yaqeen's endowment, as you all have gone about the process, is you've been very, very intentional. And that I think is something that is not yet as widely adopted as it could be. And inshallah, I hope this discussion and many more will help make these practices and approaches much more mainstream among Islamic investors and asset owners.
Yeah, I'd like to jump in here just to give a quick example of that coming in real life. So when we first started off the endowment, there was a group of brothers here who started a real estate investment company where they buy low-income housing, refurbish it, and then rent it out. That's a very common structure, but they had some unique components to their model, which we really appreciated. One was the fact that they had a way of a collection and not to evict their tenants, and how to do so and create a plan for the tenant for them to keep the house and to keep the pay. Second component was that they had committed a portion of their profits towards nonprofits, whether it be feeding the homeless, whether it be building masajid, whether it be whatever that cause would be. That was a core part of their mission. So first part was our part of our due diligence to make sure that, hey, are they doing the checks and do they have the checks and balances? Are they going to be managing the funds in a fiscally responsible way? But alhamdulillah, as over the past 5 years, they have grown tremendously, and it's been a great example to see them. And each year we have increased our commitment towards them, and they have produced great returns. So from all angles, one of them is them operating in a manner that is in line with our faith. Secondly, them giving back. Third is having great returns, decent returns. And then that whole cycle was there. So we're looking forward. Those are the kind of opportunities that we look for. And it's great to see those success stories. And we're great to hear from others as well, inshallah.
Yeah, and Brother Junaid, I'm really glad you jumped in with that. That's an excellent example of a positive investment that could be made that's Sharia compliant on a myriad of fronts. Again, not just the financial structuring and the interest, but also the human rights considerations and just getting the barakah from that. And I think on the flip side, one huge trend I see with many American Muslim endowments is, for whatever reason, Muslim endowments love real estate. And we go for real estate anywhere and everywhere. And so I'm really glad you brought an example of real estate specifically. And what I'm seeing is that often, we build our endowments in a way where, we have Muslim investment professionals across asset classes. And many of these professionals might be playing by the books, just like regular, we're targeting maximizing financial returns. But what gets lost in that is actually not accounting for some of the negative outputs of our investments. And in that, sometimes creating outputs and outcomes that are actually completely contradictory to our initial goals. So I can give an example. I was recently talking with, a group of investors who I really admire, and we were talking about their endowment, exploring ESG risks and considerations in their endowment. Again, it's a Muslim charity organization, so their core mission is to tackle poverty globally, and they're invested in a number of real estate developments that are actually contributing to gentrification. And if we think about how gentrification is happening across the U.S., there's a shortage of housing units in the U.S. And so the population is increasing at quicker rates than the construction of new housing units across the country. And so the way gentrification happens is you have real estate developers come into lower income areas, purchase properties at very low costs, flip them, and then jack up the rent prices or the property prices and end up catering to middle and higher income customers. And so they're squeezing lower income customers out of the market. And that's what's causing mass displacement of lower income families and increasing homelessness in certain areas. So as investors, like this Muslim endowment was actually contributing to gentrification in many areas across the country through their investments, not knowing it. And so on one end, in their core programs, they're seeking to tackle poverty. They're collecting donations from their donors to tackle poverty. But within their endowment, they're actually creating poverty and creating homelessness and displacement. And so that's why it's really important for us to be very intentional in putting on this ESG analysis within our investments, because we might actually be worsening the issue on one end while trying to fix it on the other. And this intentionality, I mean, إِنَّمَا الْأَعْمَالُ بِالنِّيَّاتِ, right? Our actions are based on their intentions, as the Rasul told us. And in impact investing, across frameworks, one of the key ways that we, diligence investment opportunities and managers is actually intentionality. Like it is the first item in the scorecards that many impact investors use when assessing the feasibility and the viability of an impact investment. And so it's extremely important asking ourselves first and foremost, what is our intentionality and how intentional are we being in assessing the investment opportunities, both on the positive front and then the potential negative outcomes.
Yeah, I think one of the things that you've highlighted, or one of the challenges that you've highlighted, Essma, is the limits of our education, the limits of how we are trained to think, and the sources of that education. And sometimes we don't know what we don't know, and we don't realize these limits. So when we go about investing, we've been taught, I think, as Saad mentioned, to kind of bifurcate and separate certain aspects of our existence or our faith from one another, rather than kind of making them whole. And that was one of the reasons that I had stepped into Islamic finance, was in hopes of finding that that holistic life. I'm not so sure that I did find it through Islamic finance, because of its own struggles, which are, I think, representative of the Muslim community overall, and its struggles to find debt, and to get around debt, and to create workarounds and so forth. But I think we are seeing over the last 4 or 5 years a lot of the so-called Sharia compliant investors, as much as I dislike that term, kind of adopting metrics and frameworks of impact, of social responsibility into their investment criteria. We don't see a whole lot of dialogue we don't see a whole lot of of steps from the impact world towards the Islamic finance world, and there's probably at least a few reasons for that. I think that I think sometimes Islamic finance gets kind of a bad rap for being irresponsible, if you will. And I think that if we step out of at least the reality of the industry, and we look at the practice, or we look at the concept rather, the idea behind the prohibition of interest on loans, on Riba, is actually to create inclusive and symmetrical markets, communities, transactions, and whereas debt is generally a tool kind of for extraction and exclusion, in fact. So I might take what you said and take it one step further, which is that if you have an impact investor trying to reduce poverty, let's say, or trying to better living conditions, and so they're pursuing affordable housing projects, if they're doing that with conventional debt, they're still undermining to some extent that desirable outcome, because they're still using a means and a mechanism that that excludes and extracts. It's not to say that there's absolutely no good coming about through this, but I think this is kind of a challenge that Islamic finance has. And if we can come to terms and accept this prohibition and submit, if you will, I think we have something to offer to other ethical investment communities and markets, and we can say, listen, we've been doing this, and here's our explanation for it, and here's our rationale, and here's why it fits, this other situation or this other kind of intended outcome. I think then we really become much more relevant, if you will, I think, in the conversation. But I see the Islamic finance world moving towards the ESG, and I think it was coming into ESG on my own, coming into impact that I found meaning in what I was doing for so many years in terms of structuring and drafting and so forth.
Brother Omar, I have a question for you too. Like I mean, I know that you've been straddling some of these lines pretty explicitly, and it seems like you've been doing it to trying to find that wholeness in some ways. And I'm curious, through your explorations now and having done this in multiple different areas, what's the closest to wholeness that you've felt?
The closest to wholeness that I've felt is probably two things. One, the work with Yaqeen's investment committee, because we've set aside the form over substance structures, and we've sort of said we're not going to, and Junaid, please correct me where I'm wrong here, we're not going to fulfill organizational mission, let alone our purpose as humans in worship of Allah, by engaging in those. And let's see if we can find something else. And let's see if we can find another way. And I think Junaid has touched on the growth of the endowment, just on the financial side. And I think the second piece has probably been the work outside of commercial finance, the work in Zakat and Waqf, setting up Awqaf, advising on Zakat, designing children's, refugee children education projects in different parts of the world so that they can accept validly Zakat under the Sharia. That's been much more meaningful, and I've just sort of largely walked away from certain Islamic finance structures. First was I don't want to get into technicalities, but the commodity murabaha. I just walked away from that, walked away from the so-called ijara financing structure, and just don't feel comfortable working on that. And what that's meant for me personally is a significant spiritual challenge because I'm turning down work. I'm turning down income and hoping that something pure will come its way. And that's been the nature of the work the last few years.
And first of all, may Allah accept your niyyah, and the risk that's meant for you will not escape you, and inshallah it'll come your way, and that's just a core part of our faith principle, inshallah, as well. And yes, I will confirm what you said, and I think an interesting discussion to have is kind of the difference between Sharia compliant versus impact, and that. So, I'll give you a few examples. So there's a security that passed all the Sharia compliant screens, right? When it comes to the debt level, not involved in gambling, alcohol, pornography, etc. But that company opened up a plant in Xinjiang in China, right? Which we well know about the oppressions of Muslims in that area, right? So as an endowment, we said it may fall the screens, but we need to liquidate every single portion of that in our portfolio. I just got off a call with one of our money managers who has a fairly large position in India in a textile company in India. It passed all the screens, but then when I asked the money manager, are any of the board of directors or the management of the company a part of RSS? It was a question that they were not able to answer, and I said, you know what, that's a good question, and we need to get back to you on that, because that would be something that would not fall under what we would find fall to be compliant. So we have a long way, and Essma, we've talked about this previously, and would love to get your thoughts on the approach of liquidating positions versus kind of having your voice heard, and how us as a global Muslim community, what should be our approach, right? Should we just, hey, anytime any of these situations pose themselves, do we just sell? Or do we try to have, alhamdulillah, the global Muslim community has a huge, significant amount of wealth, right? And how do we use that for change where it's just not compliant, but it's also creating this impact, inshallah?
No, that's a great question, Brother Junaid, and we'll answer that, but also want to kind of opine on one other point you just made, which is, this investment that you referenced had passed all of the Sharia compliant screens, but you did not, or Yaqeen did not feel comfortable investing in it because it used, forced labor from concentration camps that our Uyghur sisters and brothers are forced into in China. And that begs the question, like, what is Sharia compliant, right? Right now, Sharia compliant is largely being defined as interest-free. But is that Sharia compliant is the question. Like, I think it compels all of us to take a step back and say, well, how are we defining the standards for our Islamic investments? And I think, again, this kind of is a question for each institution to answer. Obviously, I mean, not all Muslims believe the same things. We don't all follow the same exact fatwas and opinions and whatnot. But it is a really important question, I think, for each person watching this to ask yourselves. So if you're invested in Exxon, and Exxon might pass, the financial Islamic screens, but Exxon might have, certain environmental violations or certain human rights violations, or, Tesla for sexual harassment, or whatever company that's using forced labor in Bangladesh and Uyghur concentration camps, like, is that Sharia compliant to you is the question. And going back to the concept of amana, whether it's your own assets that Allah subhanahu wa ta'ala has given you, or assets for an institution that you're managing that seeks to serve the community, are you comfortable investing in certain companies and meeting Allah subhanahu wa ta'ala on Yawm al-Qiyamah and telling him, yes, like defending that investment, like, is that an amana that you are comfortable explaining to Allah subhanahu wa ta'ala? And if the answer is yes, then it's yes. And if no, then that begs a re-questioning of how it is we're even defining our expectations out of the holdings within our portfolios. One example on this front, I've been giving a lot of kind of American Muslim examples. Internationally, the NYU Center for Business and Human Rights does incredible research tracking human rights considerations for migrant workers globally. And they found that a significant sector in which migrant workers' human rights are violated is within construction and development. And so they actually have a tracker, if you go on their website, where they list a number of real estate and construction projects internationally where there are significant human rights violations, in order to raise awareness and push investors to engage with these construction projects. And they've documented instances in which migrant workers were forced to work 18 to 24-hour shifts, in the scorching heat, and so they would die on the spot. And when you actually track the financing of some of these construction initiatives, they're financed by Sharia compliant investments. And so that's like a classic example, right? It's debt-free financing. However, people are dying on the job. Now, is that Sharia compliant in front of Allah subhanahu wa ta'ala? And there are so many more examples like this, but these are really, really important questions that we need to ask ourselves as we go about, these conversations. And then to answer Brother Junaid's question on this ongoing debate within kind of the ESG and impact space of divest versus invest. Do you divest from a company, for example, if it's this construction, project in whichever country, because of their human rights violations, or do you invest and then use your equity to actually push that company to improve its practices? And I think generally the way I try to think about this is, I learned from one of my teachers kind of like the three-part framework of usul al-Fiqh and how it is that scholars try to approach usul al-Fiqh. And if I explain this wrong, please anyone jump in. But recapping my understanding, essentially, scholars look at items in this framework of, does this cause mostly benefit or entirely benefit? Does it cause mostly harm? Or is it a mix of both? Is it kind of in the gray zone? And that's how I try to think about the conversation of divest versus engage. There are certain investments where they're entirely harm. Like, you cannot see benefit come out of it. So an example of that is investing in the prison industrial complex in the United States. And that's a whole other conversation I could go into for another day. But in summary, there is a growing private prison industry in the US, and it is largely what is driving the increasing incarceration rates of Black and Brown communities, the detention of migrant children, etc. So if we invest in that as Muslims, like, what is the benefit that can come out of that? The entire business line, the core fundamental aspect of the business line is putting people in captivity. Like, I can't engage with them and say, hey, stop lobbying for increasing incarceration rates, because that's the core, that's how they're making their money, right? If we try to make it human rights friendly, it just like eliminates the need for the business to begin with. So that to me is kind of like a complete harm. It's like divest, because there's no benefit in investing and engaging. An example I would say is in the middle is Amazon. Amazon is an excellent example. Amazon has many worker rights violations. There are many, documents and instances of violations in terms of safety in the warehouses, in terms of the pressure and the types of schedules they're giving their drivers. There are instances, and you could read this online, where drivers literally have to like pee in bottles because they're not given enough time in their shift to actually like pull over and go to a bathroom. And if they don't meet the targets, they're fired. And so Amazon has a lot to work on the worker rights front. However, if enough shareholders actually pool together their efforts, Amazon is one of the largest employers in the country. 1 in every 169 people in America works at Amazon. So imagine if you participate in shareholder engagement initiatives where you pool your capital and your equity in Amazon with other investors, and you could push Amazon to improve its practices. Then you're creating positive outputs on various fronts. One is, you're improving the livelihoods and the safety and the well-being of a significant majority of a significant portion of workers in America. In addition, studies have found that when Amazon changes its practices, because it's essentially a trendsetter in its industry, many other companies follow. So you're not only benefiting those workers in Amazon, you're actually benefiting many more in Amazon's peer companies. So last year in 2021, Amazon increased its minimum pay to $15 an hour. After lots of advocacy from, activists, grassroots organizations, shareholders, it was really a pooled effort. And once Amazon increased its pay to $15 an hour, a significant number of its peers also increased their minimum pay to $15 an hour. So that to me is like a very clear yes. Like having holdings in Amazon is like you're getting your hands in like the dirt, right? Because it's, when you think about these worker rights violations alongside environmental, negative outputs and all these other things, it's uncomfortable to think about. But when you think about the good that can come out of it, it's quite significant. And then obviously the last pillar is easy. It's like, good companies that, are overwhelmingly good. So for example, the real estate, affordable housing investment that Brother Junaid mentioned in Dallas, that's really easy. But I think where I see a lot of opportunity is that middle pillar.
Saad, do you want to share with us, when are you present with an investment and when are you absent? If I can borrow the divest, invest, and kind of change that around a little bit to thinking about, when are you present, when are you absent? Maybe is there an interesting case study or something that kind of, that shows us how you brought faith and principle into the due diligence process?
Yeah. I guess what was coming to me was that it's, in a lot of the cases of the companies that we're investing in, it's not an abstraction. It's not a lot of times you're talking about very small organizations. Maybe it's only a couple founders and they're thinking about what they want to do next. And, and the companies go through so many iterations before they even become the thing that they ultimately become. And so I think for us, True North has always been people and really, really deeply understanding intentionality. Why are people doing what they're doing? How does this connect to who they are as human beings? Does this feel like it's the problem that they feel like is worthy of their life? Those are the kinds of questions that we ask. And I think increasingly, what we probably added to that is and how committed are they to their own spiritual development? And their own internal awareness of why they're doing what they're doing and all these things, because, a lot of times that shadow ends up driving so much of what we do. And it's what we don't know that actually is driving, the bus. It's like, we all think that we're riding our nafs and the nafs is not riding us, but you only can figure that out if you really deeply look inside. And I think just, having people who are really committed to that process and are open, to that path, I think is really important. And so, I think recently, certainly one of our largest investments is in a company called Devoted Health. So we've done a lot of stuff in a lot of different areas, everything from democratizing access to capital to education, future of work and diversity in the workplace, climate change. There's been a lot, but I would say healthcare happened to be one of these areas where it was just, at least, I don't know, my experience with the healthcare system in the U.S. certainly is that you have two kinds of people. You have people who can't stand the U.S. healthcare system and think it's so horribly broken, and is like a huge liability to the entire wellness of the entire economy, and you have people who just haven't interacted with it yet. It's like those are the two buckets. And it's and I was in the first bucket for a long time, but I think the more we looked at it, it was just clear that it's so complicated and convoluted for a lot of historical reasons. But the net of it is that people just aren't treated well in that industry, and so we found a set of entrepreneurs. In this case, is a guy named Todd Park, who was actually the CTO of the United States under Obama, and his brother. Both of whom have been serial entrepreneurs. They've been public servants. They've also really don't need to be doing anything. But they realized that like their whole lives, in some level, were just. I think what was passed was prologue to this way that they could contribute, which is providing a sort of a humane healthcare system where the core value was actually love and treating everybody like they're literally your family. And Todd is a pretty he's an amazing human being, and there's a lot of faith that permeates his life, in his own tradition. But just watching these folks live that over and over again in a very difficult system that has so much compliance and so much complexity. And, they built the equivalent of like 5 different startups to focus really on taking care of, our elders in this community. It's like the Medicare population. And the joke that they have is actually like, if you are, well, it's like they're trying to provide like the best healthcare certainly in the US for some of the most economically disempowered, disenfranchised, minority communities. And a lot of what they're doing is all stuff that people know. It's just putting it all together under one bucket. You have to become an insurance company. You have to become a technology company. You have to become a professional mother and daughter service to take care of folks and navigate them through the healthcare system. You have to have a huge, set of humane practitioners. You have to be able to deliver that remotely wherever people are. All this stuff that they had to do under one guise. So for me, like that's a good example of like something that's where the people were just super inspired for doing this for the right reasons. And it's obviously a massive problem, and it's something that's really working. And it's like the first, it provides hope for me that, that even in this system as it is, that you could create a whole alternate universe that may end up becoming the dominant universe, which is how we ought to be taking care of people. And in the US, healthcare in general is like, that's like such a high bar. Most people in the healthcare system have the experience that I have, which is like, it's awful. It's what kind of awful is all we're trading off, and to have another company that's literally like, no, we're going to treat every person in this community. And the prime directive is, what would you do for your parents? Check to see if it's legal. And if it is, go do that thing. No questions asked. It's a very different paradigm. And it's something that it's really inspiring. And it's just, it's one example. But, I think what's really fun for me is actually looking at Dustin's list, he just published right now before we got on this call. There's like so much fun stuff in there. We're talking about like real estate and all the other things and big heady things. But I think what I enjoy, when I was looking at this list, I was like, man, like I have so many things that I could be using myself in this, in this list of stuff. There's like memorization apps and, and there's like all kinds of gifting stuff. And I'm like, I just think about, on the media side of things, and, I know some of the folks there, but I think what was actually really fun was I didn't know so many of the people on this list. And that actually makes me feel really happy. It's like this thing that even Pakistani people do, right? It's like whenever I meet a Pakistani person I don't know them, I'm like, how is that possible? All 200 million of us have to know each other. But it's actually really cool to see like, wow, there's all these amazing people doing amazing work and we don't know them yet.
What's amazing about that list is that these individuals and these organizations are using their faith and their spirituality not only as an intention as a motive, but the business is enabling it. The business is supporting it. And for some reason, when we think about maybe certain other asset classes, we tend to sort of forget about the critical idea that money and profit are not goals, they're means, right? They're means and they're mechanisms. And I think elsewhere we've talked about the fact that money is a creation. Wealth is a creation, and our relationship with wealth is a creation. And because these are all creation, they must submit to the creator. And instead, we sort of, we maybe arrogantly put ourselves, above that, and try to say, this is now an objective and a goal. And it would be when it becomes stripped of principle. And I think maybe the healthcare system might be a good example of that. When it gets stripped of principle and you just have sort of the dry technicalities, you don't have impact. And actually, you have negative impact. And one of the beautiful things about the Islamic legal tradition, the fiqh, if you will, all those technicalities, is they were all designed to achieve impact. And one of the things that I think we sometimes forget when we get caught up in impact is we forget those legalities and technicalities which are there to discipline the nafs, which are there to remind us there we are servants and that we submit. And we forget to contemplate. We forget to just sort of think, well, why am I, for me, why am I writing this clause? What's the point of this? What's the purpose of this? What's the idea of this instrument? What's the idea of writing a contract to begin with? Why am I writing it down? So on and so forth. Junaid, kind of building off of what Saad has shared with us, what are some challenges that you've encountered, that the endowment has encountered in trying to properly manage, the wealth?
What you just said can be argued. Look, their endowments, the mission of the organization is grand. It's there to impact the community. Now, we need funds in order to be able to achieve that mission. How those funds come, what way they come, doesn't really matter, because those funds are being used for this, right? Fine, what you're saying is all good and dandy, but we need to still put food on the table, right? And I think that concept itself is, and there are challenges that exist. Like, I'll give you a case where there was a group, again, going back to real estate, unfortunately, but just as an example perspective, there was a group that wanted to create a pathway to ownership for refugees, home ownership. Now, the group, it was relatively, I would say, inexperienced, well-intended. We loved the mission. We loved what they wanted to do for the people. However, they didn't have structure. They didn't have checks and balances. They didn't have a way to be able to govern the project in a way that we felt confident in investing. The returns actually it was 3-4%, which was way below our target, but we were okay with that. Okay, fine. We're going to set aside a portion of we have set aside a portion of our endowment to, hey, we'll sacrifice return for impact, for a larger impact, right? That can't be for the entire portfolio, but again, we try to, wherever we can, to maximize having both worlds coincide together at all times would be a dream, right? But unfortunately, that's not always possible, and those are some of the challenges that we do have. Like, for example, we would say, yes, something like Amazon or Alphabet Company, or they may be stuff that we've had holdings in, right? Because that's what the portfolio, large cap growth stocks. Okay, that's what it falls, and it falls under the screening. So, I guess maybe pushing back to Saad, how do you deal with when you're looking at companies where you're kind of in love with the mission, you're in love with what they're trying to do, but they don't check all the other boxes when it comes to compliance, structure?
Yeah. I mean, part of the reason I was curious about some of these things with you, Junaid, was because, we also haven't put ourselves out as saying that we are Sharia compliant, or that was not the intention. The intention was, let's just go do good things and not start talking about doing good things. Let's just go, and wherever we see it, in whatever form we see it, let's go support it. So that was, I think, a big part of where we started. Now I'm thinking about your question again. So you're asking me, how do we deal with the fact that when the form doesn't necessarily fit the function, or I think our version of that historically has been, mean, we are a for-profit venture firm that's focused on these kinds of companies, but a lot of times, I mean, some of the coolest things we've seen are actually nonprofits. And so I think what we do there is we'll just invest in the nonprofit ourselves. It's like, maybe it's not going to be part of the fund because that has a set of covenants with a group of investors that's different. But in this case, we can do the same thing and mobilize that same group in a different vehicle and be creative about that and make that happen. And that's just, so I think we've been more and more, we're finding ourselves more agnostic to, like, when we see something that we're really inspired about, and even if it's something that's not a profit driven enterprise at all, the thing is, we have such deep relationships with our people, and we know why they're doing what they're doing and the causes that they care about, that we can mobilize them in so many different ways, not just with the hammer that we happen to have. And that's been actually really fun, as you can be creative with it. The other thing I was thinking about there, kind of coming naturally out of this conversation, it just reminded me actually in a lot of ways that whenever you use a screen, a screen is like, it's almost like a checkbox. It's like something that you do to make sure that you're not doing harm, but it's not the bar. It's like, there's like if you just follow, like Junaid, if you just followed your screen, some of the examples that you had given, you would have come to an outcome that, that Essma would have said would have actually been like counter, you had unintended consequences because you hadn't thought about the whole system and it actually maybe enabling something really that you're not behind. And I think that's, and when I hear you talk, Omar, I kind of feel that nuance of like, man, I've tried these different flavors of what's out there. And if I just look at it without a first principles approach to it, like you end up feeling like this isn't it, and so I, when I hear about all this, I think it just reminds me that the nuance really matters. It's like the personal relationship, with the thing, is really, really important. Even if they get it wrong, you may invest in something with all the right intentions and all the right structures, and it turns into something else. And now you're like, and now it's actually counter to the mission, even though it was when you first started. What do you do then? And I think that's why the relationship really matters. It's because then you actually have recourse to be like, hey, like this just turned into something that doesn't feel good. And what do we do now? And, then you can have that influence too. And the other thing I would just say is that like where the rubber meets the road for us on a lot of these things is we're not the only people investing in these things. There's a lot of other people with a lot of different interests who are coming at it and may have a different lens. And so one thing that I've become pretty cautious of is just, it's like, even like in the public markets, when a company goes public, like you may have invested in them when they were a baby, but now they're this like big public company and all these people are investing it. Like there is so much pressure, when you hit the world, and like the way it's already set up, that can squash a lot of these orientations and intentions that people have. And so I think more and more what we started thinking about is how do we protect people for longer? How do we surround them with bigger pools of capital and spaciousness so that their intentions can shine through? And we even invested in a company called the Long-Term Stock Exchange, which is literally creating a new stock exchange because we realized the incentive system was so wrong that unless you address that piece of it, like like even the best of intentions can do weird things. And so that's something that we also think about lately is like, how do we surround these things with enough people who are like-minded so that when these challenges inevitably show up, we can still let people do this from a place of, not scarcity, but abundance.
Do you find that equity structures, Saad, and Essma and Junaid as well, do you find that equity structures are better for constructing relationships, for building relationships? And do you find that debt is more likely to kind of put a table between yourself and the founders or the entrepreneurs?
I mean, I'll let Essma answer that question because we do almost entirely equity, right? We've never, just the business that we're in, the venture capital world is one of equity. So I don't usually have that choice, but I think for me, it feels a lot more aligned just from what I know, but I suspect Essma has a more nuanced perspective.
Well, I think that we see impact coming out of both and an opportunity for good coming out of both. I don't necessarily think that equity as an asset class provides more opportunity for good than debt. But I do want to take a step back. I think that I was hearing Brother Junaid and Brother Saad kind of talk about this almost trade-off between impact and financial returns sometimes. I don't think that's the case necessarily. I think that sometimes that exists, but not always. So the overwhelming majority of the work I do around impact investing is within investments that seek to generate competitive financial returns. So seeking to beat the benchmark in most cases. And so there are obviously investments, impact investments, and ESG aligned investments that seek to generate concessionary returns. So they might be willing to sacrifice returns and make maybe 1, 2, 3% in order to maximize impact. And there's a lot of value there. And in fact, what we often see is those investments can make more impact because they have the flexibility of not having to, beat the benchmark. But I don't think that it's necessarily a trade-off, and that if you want to make a positive impact with your investments, you have to sacrifice returns. And I think that's an extremely important kind of caveat or nuance to keep in mind as we go about these conversations. The other thing is, not all ESG is impact. ESG, as mentioned before, looks at risk mitigation. And so I think that when we talk about Islamic investments and Islamic finance, there's a place for both. When we think about zakat and sadaqah, like that is essentially like concessionary. You're giving your $100, $1,000, whatever it is, you're not getting anything in return. You're giving that to maximize your impact and, to help and assist and uplift the poor and the vulnerable in society. Whereas, Yaqeen Institute published this really interesting paper on the history of endowments, within our Islamic faith. And one really interesting stat that the report mentioned is that within the Ottoman Empire, at one point, about 50% of arable land within the Ottoman Empire was designated for Awqaf, for endowments. And so, that land and the agricultural outputs and the trade and the profits that were coming from those lands were being used to fund, welfare programs and just various, services and benefits for society. And that's extremely important and interesting because when you think about like farming is not necessarily an impact investment, right? But the proceeds from that investment, just like a traditional, business operation, was being used to serve and improve the well-being of various members of society. And so Brother Junaid's point is really important, that some people might watch this and be skeptical and be like, well, we still need to put food on the table. We still need to bring home the bacon, the halal turkey bacon. But nonetheless, the bacon is important. And yes, that's true. If you have an endowment or you have your own assets and you want to invest, like, we're not saying give up in your investments. We're just saying be intentional about how it is you're investing. The last thing I'll say is I was recently talking to a chief investment officer of an endowment, and he manages about 10 billion. And he was telling me, he was like, it's really important for us to maximize financial returns, because if we make 1% more, that means we can give out $100 million more in grants. And so the more financial returns we make, the more we can actually give out in grants and just, do good in society. So like the concept of rizq is important. The concept of wealth is important. And that's something that's not to be undermined, I think, throughout the course of this conversation.
Yeah, I mean, I'll just clarify. We just had an annual meeting a month ago, and I will say I had this chip on my shoulder for a long time of like, I really got to prove that from a financial perspective, the performance is not only not lacking, but actually is like turbocharged. That was actually my personal goal when we started Uprising. And alhamdulillah, I can say now, like when I look at the data, and it's it's still paper in some cases, that in fact, this fund is outperforming my traditional venture capital career life before. And and to me, that was, I noticed like I was holding that really tight, because it was really important to me to prove to people that, hey, like if you do it this way, you're not sacrificing food on the table, in fact. And so it's been really, on one hand, it was kind of this revelation where I was like, wow, like I forgot actually how tightly I was holding that, and the fact that I can start to show data, even in our own funds, that actually demonstrating it pretty dramatically is pretty amazing. And then I had the thought, you know what, like, why did I care so much about that performance? Like, what was it? I mean, there's part of me that was like, I wanted to do right and give, be a good steward for the people who trusted in us and invested in us early and all these things. But I don't know, like now when I look at just how, the world around us and the situation that we're in, you just look at all the challenges that exist in the world from an inequality perspective, from a climate change perspective, I just feel like the old way of thinking is not, it doesn't feel like enough, it's, and I was looking at my own, I was looking at my own self in that context and being like, why was it so important to me to be able to like outperform? Like, why did that matter so much? And now that I actually can credibly say that I'm doing it, you know, let's see. I mean, the world can still, you know, lots can happen, but it was at the right lens in the first place. And that's the question that I'm actually asking myself right now. And it's, you know, it's part of, while we're talking, I'm actually on a sabbatical, you know, and part of the reason is because I'm just realizing that, you know, there's, I think there's part of me that recognizes that there's, you know, there's more creation to be done, and there's a better way to think about these things, and there's a better union of all these things when you think about them from a first principles place. And I think what I appreciate about this conversation with everybody on here is like, it sounds like everybody is kind of, you know, in that process of trying to figure out like, okay, this is how we did stuff, and now we're trying to do it better, and we're trying to do the best versions of ourselves, and we're trying to like meet all these bars, and, you know, like doing it the way that people have done it in the past, even when they do have the best, it's, you know, there's a better way. And I think we're all kind of coming at that from a different place. And I just appreciate, and, you know, would love to continue this conversation, not just like in this context, but like, you know, when you figured out what the humane contracts really mean, you know, and think about it that way. And we can really start getting creative from a first principles perspective. And, you know, and Junaid, when you have taken Yaqeen to a place where universities are coming up to you and being like, okay, like your bar is better than our bar, actually. Like we realize, you know, and a lot of universities are getting blowback now anyway, because they're like, all these students are coming out of these progressive ideals in the US, you know, and then they look at what their like endowments are investing in, and they're just horrified because they're like, how is that possible? You know, like, and so like there's an opportunity for someone to create something that has never existed, you know, with the bar. And Essma, you know, like I can hear in your voice, like how deeply you are ingrained, you know, in like all the literature and like, and this union too, you know, and even where you sit in the world right now with all these assets under management and actually an exploding industry in the world of impact investing, right? That's the amount of capital that's come under, like people have realized like, it's like the cool thing that we got to do, because if we don't do it, like people are going to revolt, you know, it's like come to that place. Like, that's what I've found in the venture capital world is like when I first started, people were like, why would you do that? That doesn't make any sense. That means you're just like a bad capitalist. You know, it's like you just suck at it, basically. Yeah. And now it's like, oh, no, we care about the mission so deeply. And that's, again, because they realize that if they don't market that way, like good luck recruiting, good luck having access to the best talent, you know? And so and when I look at Dustin's list, you know, like I'm just like, wow, like here's a bunch of people who are living and breathing a new reality that we're still catching up with. And so it's just a good reminder for, I think, me that, you know, we're still in that creation point, and I'm really curious what comes out of it, but I appreciate all of your contributions to it.
Yeah, but you know, responding to that real quick, and I know we're coming up on time soon. I think when you said like, why were you fixated on performance? My initial instinct to respond was almost like, why not? And the reason is because, you know, I know we kind of shared what brought us to where we are in the beginning of this discussion. Like for me, what brought me to investment management is my desire to establish endowments for American Muslim institutions, right? Like I grew up in the New York, New Jersey area in a post 9/11 America. I was like 5 or 6 when 9/11 happened. I've been wearing hijab since I was like 3. I thought it was the coolest thing. So I'd wear like shorts and like t-shirt sleeves to the beach with like hijab as a 3-year-old. And so like I was very keenly aware of the Islamophobia as like a hijab wearing woman from a very young age, like literally since as far as I could remember. And I remember like our institutions being direly under-resourced, not being able to stand up for, you know, our communities when they're surveilled by law enforcement, when people are detained, you know, en masse, all these things. And I remember I remember thinking as a kid, like, I'm really pissed off at CARE and like all these different organizations don't have enough funding and I want to do something about it. And so for me, like, I don't necessarily see something wrong with being driven by financial returns as long as they're generated ethically so that they can empower and uplift our institutions to do more good work. Another institution that really inspires me is Wafa House. It's like a local agency that serves victims of domestic violence. And we have about 6,000 survivors who we've served to date. I used to be on the board and I'm still, you know, quite involved with them. But like that agency is such a beautiful agency that is so under-resourced. And so to be able to set up like one day, you know, a $10 million endowment for them So they can just focus on serving, those that they serve, and that endowment having like really strong performance. Again, to me, that's like, yes, like I do want that. So maybe there could be two sides of the coin. I think for my own personal portfolio, I don't want to think that way because I don't want, the love of money to be in my heart. But I think when thinking about like institutions, that to me is an extremely important component because financial returns could arguably be directly tied to the scale of impact that an institution could make.
Junaid, do you want to, I know we're up on time or close to it. I think Saad and Essma have done a nice job, if I may say so, of sharing thoughts about the future and what excites them. Is there something, what excites you, Junaid?
It's, I think what excites me is the potential of what we can create and setting that standard. As Saad was mentioning that bar, right, where those two worlds don't have to be independent of each other, where returns and impact can coincide and do coincide. And I think there's living proof of that just on this call. And having the standard being the Islamic standards and the not just the compliance component, but the spirit of the law, as they say, right? I think those coming together and coinciding, and the opportunities that can face our community. So, like having that opportunity that I had posted about that, where they're trying to create paths of ownership for the refugees, having that structured properly and having that impact, that'd be amazing. I'm off a house, and so many other opportunities that are there for the, and having like our history shows that can be done, and bringing that back to life, inshallah, is something that I'm really excited about.
Oh, thank you. Anyone else? Thoughts, questions, final?
What about you, Umar? You're like pushing it to us. What about you?
I was hoping no one would ask me. I think for me, it's a move as a society, as a community first, and as a society second, towards a mindset where principle precedes profit, where we don't limit ourselves to what was thought to be possible only. I think that touches on this idea of, can we have returns while maintaining principle? To me, that question's already been answered. The question that I'm looking forward to seeing answered and manifest, and I think the list that the center has put together is a great example of that. How do we redefine our thresholds and our standards? How do we begin to think about needs versus wants and understand that less might be more, and that we might be willing to share more with one another, with our counterparties even, and rather than just this mindset of take. We're working with this group putting together a real estate business, a development business, and they want to go no debt. And it's really interesting to see the types of conversations that they're having, both positive and those that are a little bit more disheartening, from potential investors who demand a certain return without ever understanding the principles involved and without understanding the negative impact of debt in specific. And so for me, I think that's where, my dream is to see, businesses that engage in principle before profit and have such trust in the divine decree that there really isn't any worry about that anymore. So with that, I think we'll wrap up, and I think the center will feed in questions and comments in some form. I want to thank everyone for tuning in. First and foremost, we thank Allah. Thank all of the audience for tuning in, for listening, and hopefully for engaging with us. And of course, all of you for your time and your thoughts and your smiles as well. And we'll all hopefully get together regularly. Jazakallah khair. Thank you.